Hi, I'm Jill Gardner and this is The Real Deal. This week we're going to be bringing you highlights to help you break through the real estate noise. We're going to be updating our website throughout the week with the best and most interesting video clips that we can find about the real estate market. So check back here to stay up to date on the latest market developments.
The average real estate fund is down 50% over the last year. Jay Loop, fund manager for the Grubb & Ellis AGA Realty Income Fund, says the sell-off is creating some ground floor opportunities.
Right now, we think if you're interested in investing in REITs, it's a good time to focus on REIT preferreds. And these are stocks that sit up above the common stocks in the capital structure. And right now, in the REIT space, we're seeing yields ranging anywhere from 10 to 15%, about 600 to 1,000 basis points ahead of treasuries.
But are REIT yields safe? You look at a company like General Growth Properties, that stock's now about 31 cents. Can we trust those yields?
No. On a company like General Growth, you cannot. And you have to be much more careful when you're investing in common stocks in the REIT space. More recently, particularly in the lodging space and in some of the other sectors, including retail and industrial, we have seen dividend cuts to common dividends. We haven't seen a noticeable cut or reduction in any preferred stocks at this point.
Loop's fund, launched this summer, holds 80% preferred stocks. So like real estate, it's a matter of location, 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 except this time in a company's capital structure.
You're seeing lots of bank mergers and layoffs. How is this going to affect commercial office space and players like SL Green, Vornado, Boston Properties? What do these bank mergers and layoffs mean to them?
Well, in areas like New York City, it's going to mean that demand for office space is going to fall off. You're going to see both tenants vacating space as well as putting space on the market for sublease and competing with the space available for rent on the part of SL Green, Vornado, and Boston Properties. Fortunately, vacancy rates in Manhattan are still at fairly tight levels in the 8 to 10% range. And you will still see demand for some office space in Manhattan.